Alright, what's up, you jabronis? Quick update for Thursday, July 20th. And you had some pretty good selling pressure here in the markets today. Mainly in the QQQ and the tech stocks. So QQQ down 2.3%, S&P's down 0.6%, Apple down 1%, Microsoft and Google down 2.3%, SMH down 3.5%, Amazon down 4%, Snowflake down 5%, AMD down 5%, and then last night you had earnings in Netflix and Tesla, both of which kind of got hit with the ugly stick here today. Netflix down 8.5% and Tesla down about 10%. So a couple of things to keep in mind. From a chart perspective, we had that daily squeeze that we covered back here in early July. Squeeze worked as advertised, fired to the upside, and now we're kind of pulling back here towards the buy zone. The buy zone being that 21 EMA. So the squeeze has kind of already made the move. And then you got to keep in mind you have big earnings coming up. You got the Apples, the Microsofts, the Amazons, the Googles of the world, all set to report earnings over the next few weeks. And then on Monday the 24th, so this coming Monday, we have that NDX special rebalance that we covered, I think, a couple of weeks ago. So yeah, might be one of those things where QQQ made the push. You pull them back a little bit. Maybe some choppiness, maybe you kind of get through earnings, and then you take it from there. Weekly charts look fine, the daily charts look fine. I just think a little patience here with tech might go a long way. And then as far as the rest of the market, if you check out the Dow Jones here on the weekly chart, that big three bull squeeze just fired to the upside. So you might see the Dow pull back a little bit, but that weekly squeeze should have more gas in the tank. So I do think a flush here in the Dow, probably going to be a buying opportunity, and then the same thing here for the small caps. Now for the small caps, the weekly squeeze hasn't even fired just yet. So you catch a little bit of a dip, perhaps. Everything holds structure, everything holds support. Then you try to catch that weekly squeeze here firing to the upside. And then your equal weighted index, the RSP, signs of a healthier market. That also begins to fire the weekly squeeze to the upside this week as well. So that looks good. Small caps looking good. Dow looking good. And the S&Ps are pretty solid. We do trade a good... we're a good, what? 80 points above that 21 EMA. So I don't think a flush here to the buy zone is the end of the world. Personally, I would be a fan. But as far as open and closed trades, so as far as so for a recap of the work that we've done this week, we took profits yesterday in Roblox, and thank God, because that thing got creamed today. So typical daily squeeze trade. Bought it back here and took it off yesterday. So that was a W, and then today we took off losing trades in ADI, AMD, and AI. Now the thing about a losing trade, and obviously never fun of course, I think the key is whether or not you pulled the trigger on a good setup. So we took off ADI, took off AMD, took off AI, and if I show you a couple of screenshots here, these are some of our recent trades. AI did not work. AMD did not work. MSTR did not work. Mara worked. ON worked. Pinterest worked. Roblox worked. And Zillow worked. Now the thing here, if we open up the screenshots, these all kind of look exactly the same. Which is the goal? AI had a daily squeeze above that 21 EMA and a bunch of buy signals. That one didn't work. AMD was in a 4-hour squeeze above the 21, bunch of buy signals. That one did not work. Mara had a squeeze, bunch of buy signals. That trade worked perfectly. MSTR, this is back in May. Daily squeeze, bunch of buy signals. The trade did not work. The trade in ON worked beautifully. The trade in Pinterest also worked really well. The key is they all look the same. The foundation is a squeeze. We're trying to take our entries right on top of that 21 EMA, and the trigger for the entry is the big 3 buy signals on those lower time frames. So Pinterest looks just like Roblox. Roblox looks just like Zillow. That looked like AI. That looks like AMD, etc., etc. So the saying that everybody likes to throw around is that losing trades are a part of the game. I think if you can really internalize that, look at your losing trades as the cost of doing business. Find your squeeze. Everything lines up. You got a good entry. You got a bunch of buy signals. The cost of doing business to catch the trades that work, the trades like Zillow, trades like Pinterest, etc., the cost of doing business is your losing trades. And as far as the probabilities game, you can trade high probability setups. What you can't control is the outcome or the order of how those setups work in your favor. You want to think of it a little bigger picture. And then, think of it this way. If you could wave the magic wand and trade at a super elite level for the rest of your career, you might have a 70% win rate. And we're talking like you're one of the best in the world. Now think about that, a 70% win rate. You're one of the best traders in the world. Out of every 1,000 trades, you're probably going to lose on 300 to 400. It's kind of written in stone. The order of the trades, the order of the outcome, it's a little bit random. But even if you're trading the best setups possible, you're taking the best entries possible, out of every 1,000 trades, 300 to 400 plus are not going to work. The 300 to 400 plus that don't work, they're just the cost of doing business. What you want to do as a trader is just develop that discipline and get in the habit of trading that same clean setup over and over and over and over again. And then along the way, you're not getting too caught up in the results of one given trade. My goal is 1,000 trades from now, I want to look up and I want to be happy with the net results. The fact that AMD kind of shit on me today, that's just one trade. Out of my next 1,000 trades, I probably got a few hundred that are going to do exactly what AMD did. Set up perfectly, and then take a big dookie. So food for thought there. Losing trades used to be a big ordeal. Now, a lot of that had to do with position sizing, a lot of that had to do with being a little bit reckless, but mainly it was because of the emotions. The way that you view your losing trades. So long as I'm pulling the trigger on a setup that fits the bill, right? Everything fits the template, I can't complain. They'll work more often than not, but I know those losing trades are the cost of doing business. So with that being said, a little bit of rotation today. And there might be a chance, at least until tech earnings is done, you might get a little more rotation. So as far as the good-looking setups, a couple that I got for you here, Walmart, Pepsi, and Procter & Gamble. Not the sexiest stuff, but really good setups. So today in my mastery, we dumped the donkeys, got rid of ADI, AI, and AMD, and we bought some calls here on Walmart. And Walmart fit the bill, right, fit the template for a good trade, and pretty much as soon as we got filled, we were pushing into a profit. So those calls are up 25, 30-ish% here at the close. And what I'm looking for is for the 4-hour squeeze to trigger long, the daily squeeze to trigger long, and I would like to play for a push towards that 160 level. So we're long Walmart, and then Pepsi here. I would like to buy it on some sort of flush, but this does look good for further upside. Bunch of buy signals up here. You have a big 3 bull squeeze on the daily chart. You are coiled up in a squeeze here on your 2-day chart. So there's a little bit of that nested squeeze magic. So for Pepsi, if we could catch one more flush to that hourly 21 EMA, that I think is a pretty good spot to come on in, plant Yo seed, and then try to see those squeezes here fire to the upside. And the last one I got for you is Procter & Gamble. Check this puppy out. Big 3 buy signals on almost every time frame. So this tells you the path of least resistance is to the upside. Combine that with a bunch of squeezes, the daily squeeze, the 4-hour, 2-hour, 1-hour, 15-minute, 5-minute. It's a beautiful combination. Squeeze gives you compression, gearing up for a move. Big 3 tells you that move probably is going to be to the upside. So for Procter here, I think a push back towards these recent highs. Not asking for too much if these names outside of the tech and the semi stocks keep on getting a little bit of love. So that's what I got for y'all. We are long Walmart, and then I'm working on a couple reversal signals. So nothing that we're doing in the mastery just yet. But by myself, I did take a short here on the QQQ today. Bought these puts for tomorrow's expiration at $3, and they're going for about $7. Might have been a little bit bold to hold overnight, given things are being a little bit stretched on your lower time frames. Might be shaping up for some sort of bounce tomorrow, but we'll see what's up with that. But alright guys, as always, thank you for watching. Hope you find it helpful. If you haven't already, hit the like and subscribe button, and I'll talk to you in the next one. Adios.